Hi everyone, welcome to my next episode of Real Sense Retirement. I am your host, Isaiah Real, financial advisor with Laguna Wealth Advisors and 2020 5-Star Wealth Manager Award winner. Thank you so much for joining us today. In today's episode, I'm going to talk about investing in a coronavirus world. But before I begin, I want to address something for those of you, because today's video is going to be talking about us, thinking or doing putting monies to work in the markets. I want to share with you that I totally understand for some folks the fear or being scared of putting monies to work, because what if the money goes down? What if the market falls down from here and we lose these monies? Because I know how hard you work for these monies, especially with everything happening. And so with saying that, I totally understand that for some folks, it's hard to take action. But let's put it into perspective just for a moment. This is what I'm going to talk about today. Planning comes into place. Having some type of investment plan or financial plan will help, because these types of plans take these types of moments into consideration. Granted, no one knew that the coronavirus was going to happen, but a plan doesn't take into account markets going up and down and having these types of events, just like the dot-com crash, just like 9/11, just like the financial crisis. A plan helps you build some infrastructure to help you withstand moments like this. And so I'm going to talk about that today. But again, unlike several of these events that just happened, the economy was really strong right before this coronavirus happened. The government forced this shutdown. And so, we need to take that into account. And, for some folks, for us to have a fatal outlook that this is the end of the world, it doesn't really fit with history or logic. Logic has shown us that even through our darkest days, our economy and our markets pick back up. And so I want to share that with you. So to begin today's episode, I want to talk about investing in a coronavirus world. Let me start with this. Let me equate it to this. We need to have a checklist. We need to have a procedure to put monies to work in the markets. I equate it to this, and that's being an airplane pilot. As an airplane pilot, there's typically 3 things that they need to do while they're in the air. The first is always check their altitude. Are we up? Are we too low? Or are we right where we're supposed to be? As an investor, we need to always know where we stand in the markets. Is this a good time to put monies to work? So should we be on the offensive, or should we be on the defensive by being more cautious of putting monies to work? The second thing pilots do is that they need to make sure that they have the right flight and navigation to make sure they're on the right track. That's where a plan comes into place as investors. We need to make sure we have the right plan to get to where we want to go and we can withstand these types of moments. And the third thing airplane pilots do is that they always look out for upcoming turbulence, and of course they warn the passengers. Well, as an investor, we should at least be aware of what's happening in the world, in the stock market, for any upcoming volatility that may come. And we warn ourselves so that when that time does come, it's not so much of a surprise to us. And so that's what I want to talk about today. And so to begin, it's where do we stand? So the altitude, if you want to say. Where do we stand right now with the market? So if we have monies that we want to put to work, where does the market stand currently? Well, one tool that I use is what's called the bullish percent index. It keeps track of all the stocks in every single index possible, and it sees how many of those stocks are in relative strength buy signals. Again, a buy signal gives us a vote of confidence that, hey, this investment is doing well and may continue to do well. And so right now there's 4 major bullish percent indexes that I look at. The first is the NASDAQ. The second is the S&P 500. The third is the over-the-counter index. And the fourth is the all U.S. stock index. So how these work is these go from a scale from 0 to 100%. If it's between 50% to 100, so if it's over 50%, this indicator, this index, that means that this index is strong, it's healthy, that we should be on the offensive for that. If the index is between 0 to 50, so if it's below 50%, it's telling us that we should be on the negative side. We should be on the defensive side of the market. And so right now, with these indicators, the S&P 500 and the NASDAQ indexes, the bullish percent indexes, are both at 90%. So that tells us, hey, people are on the offensive. It's very strong. It's doing very well, which is fantastic. However, when these get so high and close to that 100% marker, which they are right now with 90%, we typically see a short-term pullback in the market. So the markets pull back a little bit. So big picture, it's a good thing that we're so high. But as an investor, be aware that, hey, we may see a pullback here in the near-term future. The other two indexes I take a look at is the over-the-counter and the all U.S. stocks. Well, that tells a little bit of a different picture right now. The all U.S. stocks is showing a 50% reading, so it's not telling us one way or the other. It's right smack dab in the middle. And the other one, the other index, the over-the-counter, is showing us a 44% reading. So both of those are telling us to be more on the defensive right now. Granted, they've picked back up from the lows. But when you look at the scheme of things, where we stand right now with the markets, S&P, NASDAQ's doing fantastic, but perhaps maybe we should expect a short-term pullback. And the overall stocks, the U.S., all U.S. stocks and over-the-counters are showing a little bit of a defensive posture. And so as an investor, I would tell myself, hey, you know what? This could be a time because it looks like these indicators are starting to go higher little by little. So maybe a nice time to put some monies to work, but proceed with caution because we should still be on the defensive side of the market a little bit, but this could be a time to put some monies incrementally into the markets. And so that's where I stand. That's where the altitude as a pilot, that's where we stand right now with the markets. So the second thing, a plan. What should we do for that? Again, financial plan, investment plan, whatever that may be. Ask yourself. These are some questions to ask yourself right now during these times. What's our risk tolerance? Are we aggressive or are we conservative? I have quite a few videos, if you want to check my library on YouTube, that share with you, giving you some quizzes as to what we think aggressive or conservative, what we are. The other question I ask you is time horizon. So when do you need these monies? If we're retirees or pre-retirees, if we're looking to retire, let's just say now, between the next 5 years, we want to put some more monies to work to help us grow for the long term. This could be an opportunity, but again, check with your risk tolerance, check with your financial advisor. Is this a good time to be doing that? And if we do decide to put some monies to work, should we put monies into bonds and fixed income to make a war chest of income for us down the road? Or are we okay and willing to put some monies and risk into equities in the hopes that, hey, this grows for us over the next few years so we have a larger portfolio for us in 5 to 10 years for our retirement? So ask yourself those questions as a plan. The third thing I want to go over is, any turbulence. What should we be doing? How can we protect ourselves on the downside? Well, there's a few things we can do. The first is always make sure we have the strongest investments in place. You don't want to hope, you don't want to wish, you don't want to guess. Let's, use indicators, use metrics to see, give ourselves the best chance of success for the market. And so right now, one thing that we can do to help, in a sense, minimize some of that hoping and guessing is put monies into the strongest sectors right now. And right now, those strongest sectors via Dorsey Wright relative strength is number one is still technology, especially right now with everything happening in the world. Everyone's using technology. It's number one. Number two is healthcare. Again, for obvious reasons, everyone's, being very aware of what's happening with the healthcare sector, but that's gotten a heck of a lot stronger. Some of the other sectors out there right now that are strong are utilities and communication services. Obviously, people want to keep their lights on and gas on for utilities and communication services. That's Google, that's Amazon, that's Zoom, those kind of companies that everyone's using technology to communicate with each other. And so look at the indicators. Those are the strongest sectors right now that are, have in a sense, the least amount of risk out there because we know that within those sectors, there's quite a few of companies that have buy signals, which gives us a vote of confidence. We're not guessing in a sense. We know that inside those sectors, there's companies that are getting stronger. So that's something to take a look at when it comes to those kind of things. If we're looking to get a little more aggressive on our portfolio, another thing I would suggest is have some sell stops or some buy stops in our portfolios. If we're looking to buy let's say we're looking to buy a stock and we only want to minimize our losses, put a sell stop in there for 5 to 10%. If we buy it at a specific price and it falls by 5 to 10%, the computer sells it. So you're out of the market. Yes, you lost a little bit of money, but at least it didn't go down further. Again, see what your risk tolerance is and see if that makes sense. For others, we can do to minimize it. If, hey, we want to buy something, but we don't want to buy it now and it falls, put a buy stop in there at a price higher. So that gives you a vote of confidence that, hey, you know what? If it hits this price, at least I know that, hey, something's happened in between that gives you the peace of mind that, hey, maybe this company, maybe will go higher from here. Of course, no one knows, but some of those little indicators, the buy stops, the sell stops, those kind of things can help minimize risk for folks. And so that's what I want to share with you today, just to give you a little bit of a playbook for investing in this coronavirus world. As a recap, again, always make sure we understand where the markets are at. Are we on the offensive or defensive? Right now, I would tell you, we can put some monies to work, but again, proceed with caution. Talk to your financial professional first. The second thing is make sure you have a plan in place. Ask yourself those questions. What's our risk tolerance right now, and what's our time horizon? And the third is helping to protect the downside. Make sure you try to invest in those strongest sectors to minimize some of that risk. Again, technology, healthcare, communication services, and utilities. And then if you want to, put some sell stops or buy stops in there for yourself. So my friends, that's what I want to share with you today. If you have any questions, any thoughts, please feel free to give me a call. I look forward to talking to you soon. Thank you so much. Stay safe, and I look forward to talking to you soon.